Hey everyone, welcome back to the channel. This weekend, we're taking a deeper dive into Opendoor Technologies, ticker OPN, and what may be shaping up to be a key turning point in the stock's recent rally. After a massive 36% gain on Friday, and an extra 17% spike in after hours, Opendoor is now sitting firmly above the $2 mark. That's a huge shift from where it was just a couple of weeks ago, and more importantly, it may have completely changed the need for the planned reverse stock split. So today, we're going to look at what that reverse split was all about, why it may no longer be necessary, and what kind of impact it could have had, or still could have, on the stock if the board decides to go ahead with it anyway. Let's start with the basics. A reverse stock split is when a company reduces the number of shares in circulation while increasing the share price proportionally. So for example, a 1-4-20 reverse split turns 20 shares at $2 each into one share worth $40. Opendoor's board has asked shareholders to approve a potential split in the range of 1-4-10 to 1-4-50 at the upcoming July 28 meeting. But that approval doesn't guarantee a split will happen. It just gives the board the option to act if necessary. And that's the key phrase, if necessary. Because let's face it, a week ago, when the stock was hovering below $1.50 and facing delisting pressure, the reverse split felt like a lifeline. But now, with open trading comfortably above the Nasdaq minimum requirement of $1, that lifeline is looking more like an emergency plan that may no longer be needed. So here's the bullish case. If Opendoor continues to trade above the $2 mark, or even consolidates above $1.50 in the days leading into the vote, there's a strong chance the board decides not to go through with the reverse split at all. And that would be a huge psychological boost to the market. Retail traders have been pouring into this stock not just for its short squeeze potential, but because it's still relatively affordable and liquid. A reverse split could disrupt that. Fewer shares, higher price, thinner liquidity, that's not the meme formula. But if the board says, hey, we got shareholder approval, but we're holding off because our stock has rebounded, that sends a message of strength, not desperation. Now let's balance that with a bit of caution. Just because the price is up now doesn't mean the volatility is over. We've seen stocks rocket higher and fall just as fast. If there's any drop back toward $1.50 or below before the vote, that reverse split option becomes much more likely to be used. So it's important to watch how the stock performs early next week. Also, remember, even if a reverse split does happen, it's not necessarily the end of the world. If the fundamentals keep improving and momentum stays strong, the post-split stock could still continue to run. Just look at companies like Nvidia or Tesla, who've split and continue to surge, though in their case, those were forward splits. So the context matters. For Opendoor, the split wouldn't change the company itself. But it might change how people feel about trading it, and in meme stocks, feelings move prices. Let's zoom out and remind ourselves why this story matters. Opendoor was once a rising tech name, offering a new way to buy and sell homes. They hit hard times as the housing market slowed, but recently, they've made moves to cut costs, tighten their model, and prepare for a potential recovery in home buying. Now combine that with a high short interest around 25%, a share price that's still relatively low, and a wave of retail excitement that's driving daily volumes into the hundreds of millions. You get the perfect setup for something bigger. And don't forget, hedge fund manager Eric Jackson from EMJ Capital recently laid out a long-term thesis with an $80 plus price target. That got a lot of attention on social media and arguably helped ignite this rally in the first place. So what should you watch next week? Daily volume, if it stays high, this still has legs. Price stability, holding above $2 weakens the case for a split. Any public statements from the board or major holders, if they hint the split is off the table, expect a possible next leg up. If we see a pause in the rally, don't panic. That's normal. What we're watching now is how Opendoor handles this moment, whether it transitions from a short squeeze to something more sustainable. So to wrap it up, Opendoor's rally isn't just about a quick flip anymore. The stock has fought back into compliance territory. The reverse split may no longer be necessary, and the company is showing signs of fundamental life. But stay sharp. The market doesn't care about hype for long, it moves on conviction, momentum, and narrative. And right now, Opendoor still has all three. Thanks for watching. If you enjoyed this breakdown, make sure to like, subscribe, and leave your thoughts in the comments. Will the reverse split be cancelled? Are you holding through the vote? Let's talk about it. Until next time, stay smart, stay focused, and trade safe.